Hello and welcome to Crypto Lion, the best channel where you can get all up-to-date news about Bitcoin and other cryptocurrencies. For those of you just joining us, please subscribe to our YouTube channel. You'll definitely fall in love with our videos. Also, don't forget to turn on post notifications so that you can get notified as soon as we have a new video up. So alright, today we'll be talking about buying the Bitcoin dip. Is that the right thing to do now, or is it not the right time yet? All of these questions will be addressed in this video. Please stay tuned. I'm sure you'll learn a lot that will help you with your decisions. Bitcoin's price started on a bull run in December when it set a new record of 20,000 till it reached about 40,000 in January. That is a lot of movement within a month, and then a retracement. Experts say this correction is necessary to keep the Bitcoin price healthy. Market analysts predicted that Bitcoin's record-breaking run may continue, with strategists from JP Morgan stating that it could reach above $100,000. Others warned that the notoriously volatile cryptocurrency could crash in the short term, as it did following the last great bull run in 2017, though long-term outlooks generally favor more gains. Recently, Craig Russo, director of innovation at blockchain firm Polyant, made a comment about Bitcoin. He said Bitcoin has entered a new phase of price discovery, largely driven by amplified institutional interest in the digital asset. He also said that we probably have not yet seen peak retail participation, as highlighted by the low search and social activity relative to 2017. Retail participation coupled with accelerated institutional participation will likely continue to drive the bull market in the first quarter. Bitcoin successfully cemented itself as a legitimate asset in 2020 and will continue to be adopted across the financial industry, regardless of any positive shift in the traditional global economy. Rashid Ajaja, CEO of decentralized platform Alliance Block, added that in this first quarter, Q1, Bitcoin could peak between $50,000 and $60,000. Bull runs usually last for around 3 years, so we can probably expect it to be 2023 before we see massive corrections. According to her, any kind of crash is likely to be outside the sphere of macroeconomics, or potentially as a result of an issue with miners or dramatic overpricing that needs overcorrecting. Any crash we do see will not be as drastic as those we have seen before, thanks to increased network effects and institutional involvement. A slow come-down began during the correction and later accelerated slightly, which caused a continuation in the selling pressure, with little respite for traders attempting to buy the dip. While traders were hardly panicked by what remains standard behavior for Bitcoin, predictions began to favor a break from the kind of parabolic action of recent days and weeks. Bitcoin price reduced as much as 21% over a 2-day period, to as low as $32,389. Since the start of the coronavirus pandemic, it's the biggest 2-day drop, wiping off nearly $140 billion in total market capitalization. The summary is that investors reacted to the stronger dollar and growing political uncertainty. However, Bitcoin is still up roughly 89% on a trailing 1-month basis. Nevertheless, the drop did send shivers down the spines of investors. Peaks and valleys will always be part and parcel of investing in Bitcoin. What I mean by peaks and valleys are just highs and lows, simply. But I believe this is just a momentary blip, and normal service will resume soon enough. COVID-19 is surging once again in Asia, and the impeachment of President Donald Trump is jolting the markets. The strengthening of the dollar and higher bond yields are also an important contributing factor in the fall in Bitcoin prices. However, all these factors are temporary in nature. In the long run, Bitcoin will continue to climb higher. Financial institutions are increasingly allowing users to buy, store, and sell cryptocurrencies. That's why in a recent Bloomberg Crypto Monthly report, analysts are predicting that Bitcoin could more than double from its current value in 2021. The recent surge in Bitcoin prices is due to multiple factors. Economic optimism, big-ticket investment banks banking the scarce digital currency against inflation, and a weakening US dollar are some reasons. However, we believe the biggest contributor is higher institutional interest. Square, PayPal, Nvidia, and CME Group all provide exposure to the cryptocurrency to their users. All of these companies are large, diversified conglomerates. Therefore, it's hard to pinpoint how much money these companies are making through Bitcoin. However, considering the surge in its price, it will be a significant contributor to the bottom line looking ahead. Just as an example, Square's Cash app generated $1.63 billion of Bitcoin revenue and $32 million of Bitcoin gross profit during the third quarter of 2020. This was up approximately 11 times and 15 times year over year, respectively. Pantera Capital research shows PayPal and Square are securing all the new Bitcoin added to the market daily. That's great news, particularly for PayPal users. The online payment system provider allows its customers to buy, hold, and sell cryptocurrencies such as Bitcoin and Ethereum for as little as $1. CME Group, which is the largest financial derivatives exchange, also offers Bitcoin futures contracts. Up until December 16th in 2020, 8,560 CME Bitcoin futures contracts, equal to roughly 42,800 Bitcoin, traded on average each day. Simultaneously, the institutional interest keeps increasing. The number of large open interest holders reached a record of 110 in December. We've been here before. Highs and lows are not new phenomena for Bitcoin, as I pointed out when I talked about peaks and valleys earlier. However, the cryptocurrency is now finally gaining institutional support, which eluded it for a long time. The pandemic certainly helped. During the widespread lockdowns, online commerce and payments ballooned, increasing interest in digital currencies exponentially. Bitcoin was always volatile, but the past year has shown that every asset class can become wobbly in an uncertain environment. It was always regarded as an interesting store of value due to the ultimate ceiling of 21 million and the difficulties in mining it, but its wider acceptance is bringing a sense of credibility and stability that was hitherto missing. Bitcoin whale addresses, wallets with more than 1,000 Bitcoin worth nearly $350 million, nonetheless have continued to rise. It rose by 4.02% since December 2020, according with the findings of independent researcher Elias Simos. In the same way, smaller addresses with 0.01 Bitcoin worth about $350 have dropped by 6.32% in the same period. The comparison supports the narrative that institutions are buying Bitcoin at the expense of retail investors and traders. Furthermore, long-term Bitcoin tops, for instance 2013 and 2017, are marked by retail euphoria. Currently, the markets are witnessing the precise opposite. Stimulus spending by the US government is driving many investors to worry about a depreciating dollar and consider alternative stores of value like Bitcoin. The incoming Joe Biden administration has already suggested that the recent $900 billion stimulus package released by the Federal Reserve is just the beginning, causing institutions to consider Bitcoin and gold. Let's consider what billionaire Michael Novogratz also said. He said that the furious rise for Bitcoin in recent months has left the cryptocurrency vulnerable to pullbacks, but new institutional buyers will step in to stop a slide. This seems to be happening anyway. Blockchain analytics firm Glassnode also noted that whale address numbers have increased by nearly 25% year-on-year and have risen by 200 in the past 2 weeks. Raphael Schultzkraft, CTO of Glassnode, also said that the bull run could soon resume, as the network remains healthy and other on-chain indicators are biased bullish. Data provided by Glassnode also shows some retail investors or weak hands, or investors lacking confidence or resources to hold assets for the long term, have liquidated holdings. The number of addresses holding less than 0.01 Bitcoins dropped slightly from 8.54 million to 8.53 million total addresses, indicating that some participants responded by selling the drop. This is likely signs that it's the best time to buy the drop, as predictions show a continuous bullish run will soon resume, but like we always advise, please do independent analysis as Bitcoin is always volatile. Let's take a look at some charts. This chart shows Bitcoin in an ascending channel, which indicates that the long-term bullish run is still very imminent, but you will notice its current price is in the downward trend, which is the dip we're talking about around the portion where we have the purple arrow. As you can see from the chart, the expected bull after this dip is a long one, expecting to reach the top of the triangular channel. This shows that the best time to buy is during this dipping period, as Bitcoin is set to go on another long bull. According to the chart, the price may exceed its all-time high in the long run as it tries to make it to the upper end of the channel. This chart shows the price of Bitcoin trying to converge in a symmetrical triangle. The chart is a 24-hour chart, and it's considering the prices for some days ago inside the symmetrical triangle. That triangle is illustrated using the two dotted blue lines that appear as if they're going to meet. So the idea is that the price is eventually going to break out of this triangle as it approaches the tiny ends, and since Bitcoin is in an overall bullish run, the breakout is definitely going to happen in the bullish direction. There are predictions and analyses that Bitcoin is going to resume its bullish run very soon, and of course buying the dip assures more profit. So the predictions suggest that the dip period is a good time to buy and hold or long Bitcoin so the rewards can troop in as soon as the bullish run resumes. If you made it to the end of the video, a very big thank you to you. Don't forget, it's the Crypto Lines channel and your reliable channel for crypto news and predictions. Kindly subscribe and like our videos, and please turn on post notifications so you'll be the first to know when we add a new video. We'd love to hear from you in the comment section below. Good luck and happy investing.